This is my CPF annual update of the year of 2025, and this has been my 4th anniversary doing this since 2022. Because if some of you remember, old timers, 2022 1st January, I did my final CPF top up and achieved full retirement sum at the age of 30 before my birthday. And this has been the long anticipated video of FRS plus 1. For those of you who have commented, thank you for your comments. This video will now address the full retirement sum, especially for 2025. So the official full retirement sum is $213,000 for the year of 2025, and this number has been long time announced for many years ago. We have already know that the FRS is 213,000 because it is all published on the CPF website. You can see here until 2027. And for the context of talking about full retirement sum, usually we talk about full retirement sum in the special account only. Can you make up full retirement sum from OA plus SA? Yes, you can, but usually we talk about SA only, because once your special account has reached the full retirement sum, you cannot do any retirement sum top up anymore, plus you cannot transfer OA to SA. So if your SA is below FRS, you can do top up, you can transfer OA to SA, but after that cannot. That's why we always say full retirement sum is with relevance to the special account only. Anyway, this year video is a little bit different. It is less of showing off my CPF balances because I feel that there's nothing much I've done since 2024. So I am officially on a CPF cruise mode, autopilot. I will not be doing any more top up. I have not done any top up for the past few months, and even for the brand new year, I will not be doing any more CPF top ups this year, which I announced last month in my CPF strategy video. By the way, this video is recorded on the 20th of December. So when you're seeing it right now, it may be the brand new month of January, brand new year, but I'm going to have a little forecast of my CPF interest. So for my SA, I forecast it to be $9,400, and then for my OA, I forecast the interest to be $3,600. This is the combined supercharged interest between the OA and the MA add up together. So 9,400 special account interest, 3,600 OA interest. And then when I release this video from 1st January 2025, let's see how far is my actual CPF interest away from my forecast. Hopefully not too far off. With the interest out of the way, just in case you think I'm a house guy just speaking rubbish like some rubbish influencer, then I can show you lah, my CPF SA balance is really like that, and it's not a secret. I've reviewed this like over the years already. And don't get me wrong, I don't expect many of you to follow what I'm doing because I'm a xiao like some people call me, and it's definitely not easy, not applicable, not relatable, as everybody's personal situation is different. So you may choose to top up CPF early, you may choose to top it up more in your retirement years, or you may even choose not to top up and then laugh at people who top up. That is really your own pasar, okay? We don't live for others, let's live for ourselves in 2025, which is why this is definitely not financial advice, and more importantly, this is not sponsored by CPF or the government. It's really my own doing for 4th anniversary already. But if you want to join like-minded people interested in building CPF and their retirement wealth and their financial independence, then join us at 18,000 over members at Honey Money SG Telegram. Now, just as I mentioned in the introduction, if you think I did any moonshot thing, any spectacular miracle I did in 2024 to supercharge the SA to FRS, then you cannot be further away from the truth, because in fact for 2024, I think I did minimal, and worse still for 2025, I expect to do nothing to my CPF, no top up except mandatory contributions. So the question is why, right? Why are you not doing anything to your CPF anymore? Do you not believe in CPF? So the main reason is definitely because I'm at the limit already. Special account already hit full retirement sum, cannot top up anymore, cannot transfer OA to SA anymore after the full retirement sum in your special account. Medsafe account even though they have raised the BHS, I'm not going to top up or VCMA to the new BHS because I don't need that tax relief. By the way, it's like a $4,000 increment year over year. So it's purely for a tax relief reason. I top up because of tax relief. I also don't top up because of tax relief. So my CPF will be fully on cruise mode this year, 2025. Autopilot, I won't touch and I won't meddle with it. I will just see the mandatory contributions coming in. Any deductions, I will also see it. But then another question will come. I thought the CPF full retirement sum will increase every year based on what you just showed. Then how can you just cruise? In fact, based on this table, you can see that 2026, next year FRS will be $220,400, which I already surpassed, and 2027, which is $228,200, which I have also surpassed. But I know that's not the answer to your question. So I'm here to address why some of you will prefer to hit the full retirement sum early. And the main reason is because your annual increment in the FRS, which is around 3.5%, will be slower than the interest rate that CPF is giving you at 4%. What do I mean? Let's do some calculations. So if we look at the increment year over year, right? This year is 213,000 in the FRS. Last year is $205,800. So if you use this division, then you'll realize that the increment is 3.5% per annum year over year, right? And then all of you should know by now that your special account is giving you 4% per annum interest. 4% per annum, larger than 3.5%, right? So by right, even if you don't do any more contribution, your interest will cover the increment in the FRS, okay? Whatever is credited to the SA will still stay in the SA, quite different from MA. MA later I touch. So as long as the FRS annual increment, 3.5%, is still lower than the annual CPF interest rate for SA 4%, then you don't have a problem for now, okay? For now, next time we don't know when the policy change, okay? Maybe they will increase it to 4% per annum increment. I don't know, I just predict only. Don't take my words for granted. I'm not the government. So do you realize that once you have hit the full retirement sum in SA, you can relax already, at least relax a little, because you don't have to worry about the ever increasing full retirement sum that is published on the CPF website that everybody like to complain year after year. And I'm sure by the time the news is out, then people will complain on Facebook group and Reddit group again, no? Hey, why increase FRS again? Walao eh. But let's touch on the Medsafe account now. Do you know that the basic healthcare sum, BHS on Medsafe account, can increase much more than 4%? In fact, this year BHS 75.5k, last year 71.1k. If we do the math calculation, you'll realize that the increment is 5.6% per annum there. 5.6%, much more than the 4%, right? But anyway, the Medsafe gap, right, for the BHS is usually filled up by your mandatory contributions. If you are still working, like for me, below 35, right, 8% of gross income will go to the Medsafe every month. So even if you don't do any top up, by the end of the year, it should cover to the new BHS already, even without the interest. That's assuming you have regular income coming in, including your bonus if any. And basic healthcare sum increment is always welcomed by many, especially high income earners, because that is when they can then do the tax relief opportunity to VCMA, get some tax relief on the CPF top up because their FRS already reached in the SA, so they cannot do RSTU like me anymore. But at least they can do BHS. But this I'm not doing. I need to confirm again, I'm not doing. Now, before I go to the other 2 points of why you should reach your full retirement sum earlier, these are 2 disadvantages that I can feel for those people who choose not to top up to CPF. Number 1 is the loss of tax relief opportunity. Now, for many of us who have reached the full retirement sum earlier, most of it is actually coming from the fact that we transferred from the ordinary account funds to the special account. And that is why you realize that once you've done this step, you're filling up the SA limit, right? Once you fill it up, you cannot do any more RSTU, which also means in your future years, should you need this CPF top up for tax relief, then you do gila, you lose out because you don't have it anymore. So even if you want to cut more tax, also cannot because you're already at the limit, which is my case. But that doesn't mean it's the end game, because you can still do VCMA when the basic healthcare sum has increased. Or, you can consider SRS contributions as a form of tax relief as well. This is only when you want to max out everything, then you realize, oh, nothing to do already leh. Then maybe you'll regret lah. But fortunately, I am not in this situation. Then the other disadvantage of reaching your FRS early is definitely opportunity cost. Because some of you will be very good investors, very good traders, very good business owners who really know how to use your funds and utilize them to the max. Okay, you all don't believe in CPF managing your money, giving you just 4%. You all can outpace 4% easily. Like for example, even if you place it in the stock market index fund averaging 10% per annum in the S&P 500 index, you realize that there's a better place to put your cash inside instead of the CPF. Then by all means, go ahead. And the reason why am I so big on CPF, even though I have investment sense, is because like 5 to 10 years ago, I don't have the investment mentality or maturity that I have right now, like to hold through long periods in a broad-based diversified index fund. Okay, 10 years ago, I really don't have this sense. I would like, buy low, sell high, or buy high, sell low, whichever way you see it, in, out, chase all the shiny objects. I don't have that investment maturity. And that may happen to some of you before, because you are trying to chase the latest stocks, the latest trends, the latest shiny thing. Okay, but you realize that it's all empty. But really, if some of you are really good in investing, I don't see a point for you to top up CPF. In fact, one of my brokers, Interactive Brokers, is where I place most of my investments funds in. Okay, because I invest in the S&P 500 index to track the broad-based market returns. And this is where Interactive Brokers offers the lowest exchange rates. Plus, I can do RSP, regular savings plan, and dollar cost average throughout the entire bull and bear market. And this is how I achieve long-term returns based on how I invest. So check out Interactive Brokers if you also want to invest for the long term. So that is the disadvantage of topping up CPF too early lah. But let's go on to two more advantages if you want to achieve the full retirement sum early. What other psychological or realistic advantage you have? Advantage is definitely a financial safety net. And when I talk about a financial safety net, it's something that is stable, you know the expected returns, and you know in the future how it's going to turn out. This is exactly what CPF is for. You're building your retirement funds. You're not building your wealth accumulation. Wealth accumulation is like taking more risks, taking a high paying job, starting a business, quitting your job, and then go into a new business opportunity to increase your income. That is wealth accumulation. Financial safety net is something in your late game, like in your 60s, your 70s. What if you have no retirement funds? Okay, are you going to draw out from your investments? Some of you may, but some of you may choose not to. And this is where CPF comes in as a financial safety net that you can be sure is here for the long term. It will be there when you're 55 and you can withdraw above the FRS, and it will be there at 65 when you want to do CPF life payouts, barring any policy change. Correct as of the date of recording. So you do it once, you do it good, do this one time, just achieve the full retirement sum as early as you want or as you can. Then you don't need to worry, the annual interest will take care of itself. You don't even need mandatory contributions, like you want to quit your job, take a sabbatical, or even be a self-employed. No need to contribute to SA and OA. You can do all that. But first, you must have the financial safety net. And this is where CPF comes in. Like for myself, as a living example, after I achieve FRS, I quit my job, I start this business, and I venture into more other things that are considered high risk that I did not show on camera. And more importantly, once your FRS is filled and your MHS is at max, you have this supercharging to your ordinary account, which could help you give you more OA funds, whether you want to use it for property or you want to use it for investing. Supercharging effect is there. Okay, I haven't talked about supercharging for a long time. I think it's due for another update. So if you want the supercharging update, go and comment charge plus one. Okay, I'll do a supercharge update. Last benefit of reaching full retirement sum is that you don't have to worry about accrued interest. Okay, when we are hearing of accrued interest, especially if you're new to the personal finance space, financial literacy, then you'll be very afraid, because there are some people telling you government is charging you double. First, they charge you the CPF loan interest rate of 2.6%, okay, for HDB loan. Then they are making you pay another 2.5% for accrued interest, because instead of CPF helping you to earn the interest, now you have to earn your interest yourself and put it back. So 2.6 plus 2.5, 5.1%. Walao, myself don't use CPF to pay for home. I hear all these comments and then I go like, do these people really know how to count or not? First of all, I have nothing against not using CPF to pay, especially if your CPF has very low balances, like you are self-employed. You have a lot of cash balances, but maybe because you don't have the requirement to top up CPF like a normal employee, then use cash pay. Yes, I understand, that is okay. But for those people who really on this mindset that accrued interest is very evil, accrued interest is government taking away my money, then do you realize that if you use your CPF funds to pay for your property, and then your cash can also put in other places, right? Your cash don't have to be either at 0% interest, right? Can put in T-bill, can put in SSB for the lower risk. Then if you want higher risk appetite, you also have investment returns, property returns, whatever crypto returns. Okay, all this I cannot advise as a non-licensed financial person, but you all know what I'm saying. And you realize that once you've reached the full retirement sum, even if you pay back the accrued interest when you sell away your property, you're paying back to your own CPF account. And either you can use it to pay for your next property, or if you have reached the full retirement sum and you are above 55, you can withdraw, right? Right. Above 55, above FRS, you can withdraw what? So accrued interest is not an evil thing. Accrued interest is just a feature. Okay, it's just something that you need to take note of, but not something that destroys you. Okay, I want to clear all this misconception about accrued interest already. So I hope this gives you a more holistic view of how to view the CPF full retirement sum, whether it is an advantage or disadvantage. I have laid out them for you. Okay, I'm not telling you to all in into CPF. I'm just saying CPF top-up is an option, $8,000 for tax relief, which is pretty sweet. But if you have other better investment opportunities outside of CPF using your funds, plus the fact that you are confident and you're proficient in it, then by all means, you can always choose the path that is suitable for you. Alright, I'm not here to advise you, I'm just here to provide options from an education or financial entertainment standpoint. So this is my stand regarding the full retirement sum. I myself have reached it early, but I don't think anyone should really follow my advice. Okay, just do what is most suitable for your own life. We don't live for others, we live for ourselves. Let's do it in 2025. And if you want to go back to the argument of whether you should use CPF or cash to pay for property, I already laid out in this video right here. Go and check it out, okay? You'll see my comments about accrued interest.